Okay. Hello. Good morning, everyone. Uh, this is Franco Sobrano, the Chief Operating Officer of Sibulan Masters, and with me, of course, our Chief Financial Officer, Mr. Grant Cheng.
Hi, good morning, everyone.
We're very happy to be with you again. Our quarterly date with you, our dear investors and partners in the industry. As we were talking here this morning, having a good cup of coffee with my CFO here, we realize how time flies. It's now May, middle of the year. I guess it flies faster for us at CLI when we're so busy, when we're really so productive as we cross towards the middle of the year. So very happy today to be reporting good news again. And we take a lot of pride in that. So in the first quarter, we achieved outstanding earnings performance, 62% year-on-year higher, using our normalized net income to parent, which increased to 811 million from 502 million in the previous period, after taking out the tax adjustment provided by the CREATE law. I think one great highlight here is really our robust top-line growth across all segments, 52% more year-on-year. This is 3.6 billion in a quarter. When we listed on the stock exchange, we had 2 billion in a year. So this is very important to us, wherein we are really reaping the fruits of a lot of hard work, a lot of strategies, and basically it mirrors now our commitment to Vismin, and it is repaying us today. Thirdly, there is strong sales take-up driven by new launches, 36% growth year-on-year. So I'm referring here to a lot of our reservation sales. We achieved our record performance of 16.5 billion in new reservation sales. This is really us being present in most of the key Vismin cities. One of the key success factors for us is we never stop construction. We never stop getting new projects during the pandemic. So in a way, Sibulan Masters is ahead in getting that demand and providing the necessary supply. So we're now inching towards our 100 billion mark. Last year we crossed the 50 billion mark in assets. We're now at 70 billion. The asset growth is driven by the increase in receivables as units become ready for takeout. So in the first quarter, we launched 4 new projects. One of the most significant of which is our first project offering in our Davao Global Township. We launched the first residential offering called East Village, selling out 3 towers in just 4 days. That's never, we thought we set a record last year selling 3B in 1 week. Now we sold 4 billion in 4 days, another record for Sibulan Masters. So all this gives us enough confidence, and we're one of the few to really provide guidance to you, our investors, our partners, our bankers. Based on the momentum, the amount of launches we still have, and even the second quarter performance that we have so far, we are really poised to exceed year-end earnings guidance of plus 20%. We are on track. It's recovering very well. And we see a lot of stability, a lot of certainty in what we can control here at Sibulan Masters. So with that, I turn you over to our CFO. We'll give updates on our financial performance.
Thanks, Franco. So indeed, it's been a good start to the year for us. And I'm happy to share our results and give a little bit more context to those results. And I look forward to, as always, I really look forward to these briefings to engage with your questions and allow us to share with you the details of our business in the spirit of transparency, in the spirit of being a true steward and of your shareholder value. So our total revenues grew by 53% quarter on quarter from 2.349 billion in the first quarter of 2021 to 3.585 billion in the first quarter of 2022. This was mainly driven by more construction progress, so more percentage of completion, and units that have qualified for revenue recognition. So just to segue a little bit from what Franco said, when he said that we're on track to reach or even exceed our guidance targets for this year, our industry and the way we account for our results lends itself to very strong visibility of how we're able to how we're going to be able to report results until the end of the year, because these are projects that have sold. It's just a matter of executing on the delivery and collecting on the already signed contracts. Our OPEX, our cost of sales went from 1.2 billion to 1.93 billion, resulting in a growth of our gross profit to 45%. Our operating expenses increased by 34%. And if you go now to profit before tax, that leads to a 50% growth of profit before tax, from 716 million to 1.07 billion. The growth in the OPEX was the significant contribution to the growth in OPEX was due to commissions. And this is what I call the best kind of operating expense. It means that our products and our inventory is moving at a proportionately fast clip. So we are more than happy to pay and support and bring in our selling partners, our brokers that are moving our inventory. And we're more than happy to pay this as an incentive for them in order for us to be able to achieve these numbers. So this results in a consolidated net income after tax of 820 million. And for the parent or for CLI shareholders, that's 811 million net income after tax. So compared to last year, quarter one last year, this is a 13% growth on the consolidated basis and a 14% growth on the parent basis. I will emphasize, though, that last year's number was included a one-time recognition or one-time tax benefit gain of 212 million due to the implementation of the CREATE law, which, if again to jog the memory, was retroactively implemented even up to tax reporting periods of 2020, which means there was a one-time upside, one-time gain to that. So in order to compare just the operations or the net income coming from our core operations or our business, our core business, if we take out that effect of CREATE, it resulted in 502 million of net income last year in the same period. So if you compare just the net income coming from our core operations and business, that would be 811 million. That is a growth of 62% quarter on quarter. So really, it's really a significant result, especially if you just compare the net income contribution from our core business, taking out one-time gains. Our margins remains healthy, although I'll be quick to add that yes, there were a little bit of challenges on the gross profit side due to a little bit of compression in our gross profit margins due to higher input costs. I think this is something that everyone is quite familiar with. Fuel costs and raw material costs have affected this to some extent. But the good news is that a lot of our costs have already been fixed. Input costs or construction material costs account for less than 30% of our overall costs. Of course, there's land costs, design costs, operating costs. And so our net income margin and our EBITDA margin has remained relatively steady despite some of those pressures that we're seeing from external factors. Okay, next slide. Thank you. Oops. Stop, please. Thank you. Okay, so let's take a look at where those revenues are coming from. So quarter one this year, you could see that there's a real growth in the revenues we're able to achieve compared to quarter one of last year. So it's a 53% growth, and this came across the board. You could see that driven by our core business and anchored by our real estate sales, which grew by 42%. But you could see broad-based improvement as well across all our business segments. Our leasing is up 28%. Hotel revenues are up 284%, but of course, albeit coming from a very low base. And management fees from our joint ventures and our other development ventures are up by 34%. Our unrealized revenues has also grown to 26 billion pesos. So this is something that we continuously monitor, and particularly for me, it gives me great comfort in communicating our projections, because this is what I meant by our business is in a position where we have very strong visibility of how much revenues we still have to recognize. So these are all contracted sales. These are all signed contracts. So despite us growing revenues by 35% and 53%, 35% for the whole year of last year and 53% quarter on quarter this year, we still grew our unrealized revenues. So it means that, yes, we drew a lot from the tank. We were able to generate this many revenues and put it on our financial statements. Yet the water level or the unrecognized revenues in our tank still continue to grow. So on a net basis, our growth is sustained, and we're looking forward to many, many quarters of this type of sustained growth. It is strongly driven by our economic housing model. So again, there's a lagging, there's a lag period between actual sales or when we sign a contract and actual revenues when we build the property. So if you recall some quarters ago or about 1 year ago when we reported reservation sales in 2019 and 2020, it was really buoyed by our Casamigos economic housing segment. So it is now translating into actual revenues and net income we're putting on our financial statements. And if you could see the lower table now, a lot of our business is quite broad-based. We expanded. When did we expand outside of Cebu, Franco? I think
2015.
2015. That was the first time we,
yeah.
15, 16.
Now it's more than our Cebu.
Correct.
Our Vismin business.
Right. So this is really something that allowed the business to become very stable, that we are now diversifying ourselves geographically, and only 36% of our revenues are now coming from the Cebu region, whereas 29% is coming from Mindanao and 34% is coming from Greater
Visayas. We'll
Visayas.
still keep our name, Cebu Landmasters. Sa Visayas, Mindanao, Landmasters is quite long.
Yeah.
For our marketing.
Correct. And it speaks to our heritage. I know there are many companies that keep their home name there, but it does show that we're quite diversified, and it shows our commitment to the entire region. And our growth is our expansion radiates from our headquarters in Cebu. So we're expanding in Ormoc. We're going to have our first project in Palawan. This is the natural way to grow, and I think we've grown quite well and quite sustainably, if I may say. Next slide. So if you look at reservation sales, or just the number of contracts we were able to sign up by this quarter. So last year, we had 16.5 billion pesos worth of sales or reservation sales. And this year, in the first quarter, we've managed to book 4.5 billion pesos worth of sales. Again, anchored by that amazing condominium launch in Davao, where we sold over 4 billion pesos worth of condo sales in less than a month.
In less than a week.
Less than a week.
Yeah.
So there's just so much pent-up demand that is out there, demand that we are diligently trying to serve. There's a lot of underserved and backlog demand. So we're not just serving current demand, we're serving, in fact, backlog demand. So this chart is dominated by that project in Davao. So is the one here. But then it belies the fact that we know where to spot opportunities. We know where demand lies. And as we report our numbers in quarters 2, 3, and 4 for the rest of the year, this will balance out. But it really shows that when we launch our projects, and in fact, when we acquire the land and way before launching the projects, we really it demonstrates our ability to deploy capital properly. And so we're looking. I think this year, every year has been a record-breaking year in terms of the number of sales. So 2019, look at this, 9.6 billion pesos in sales. 2019, 12 billion. And then the pandemic hits and our growth and our sales, maybe the growth trajectory slowed a little bit because people can't go out. We can't do product launches. Permits were a little bit more challenging from a government approval perspective. But every year has been a record-breaking year in terms of the number of the number of launches and the sales value that we're able to capture. And I think this year won't be any different. In fact, I'm really looking forward to the resumption of a type of growth rate that we've managed to achieve sustainably in the past few years.
Yeah, if I can add on this, Grant, I think it's one of the most beautiful charts you'll see among the real estate companies here. This is really our achievement. It's been a lot of hard work, but every time we plan for a year, we've already planned for it 2 years before, 3 years before. So what really makes this happen is our preparation, what we call our ground game. We are very present on the ground, and this is really also our way of saying that the real estate industry is very much alive. The demand is there, but companies like CLI, who are very efficient, are able to take advantage of such opportunity a little better or better. So as I said, I keep looking at this chart and I keep patting the back of our sales team because I want to maintain that chart, that trajectory.
Right. And this chart, again, this is the leading indicator. So this tells me what kind of revenues and net income I know we'll be able to achieve based on the actual market demand we're facing. It's just a matter of execution. So the ball's in our court where we have to deliver the projects on time and at cost. And historically, we've really done that. And we look forward to many, many quarters of this sustained performance. All right, next slide, please. And this is our balance sheet now. And if you look, our balance sheet has now grown to 70 billion pesos. And that is a 5% growth since the last quarter of December 2021 or year end. And so this 5% growth is just in one quarter, anchored by the growth really in what I would call core real estate assets or core assets in our business. And it's, if you look at where the growth of our balance sheet is, it is in accounts receivables and contract assets, which again, the realized monetary value of the sales contracts that we have signed 2 or 3 years ago. Real estate inventories representing also the value of the land that we are holding on, and we're acquiring land in order to ensure a robust pipeline of expansion. Investment properties have also gone up in value to 520 million. And I would hasten to add that these investment properties are still booked at historical cost or acquisition cost or construction cost without any reappraisals yet. I will just want to emphasize that. So this is really a growth of our balance sheet in our core real estate business. This is despite the fact, by the way, that we've paid out cumulative dividends of 1.3 billion since 2018. So this is the kind, the balance sheet would have been much bigger, the equity would have been much bigger. But of course, CLI has continued to at least be in a position fortunate enough that we can share and dividends to our shareholders. And just a quick look at our capital structure and capitalization structure and the debt structure, because I know that a lot of you might be or are aware, especially the savvy investors who are attending analyst briefings, about our interest rate environment and the val and reference rates creeping up. So if you look at the trend in the past 5 years, we've managed to secure cost of debt at lower and lower costs. Yeah, we managed to secure more debt at lower and lower costs. So I've always known we were in a privileged, extraordinary time, because not only did we increase our leverage, we've also lengthened our debt maturity profile. So again, we added more debt to the balance sheet and strategically used leverage in order to get expansion. At the same time, we've lengthened the debt maturity profile of our interest-bearing debts, such that a lot of our debt, we've managed to move a lot of our debt towards the longer end of the curve. But at the same time, our cost of debt kept going down as our credit kept improving and as more financing institutions and lend institutions knew CLI and had confidence in us and gave us very prime rates. But then we're of course noticing that we are not immune to gravity and that it's gone up by 7 basis points. And so your team has taken the strategic move of starting to fix the majority of our rates. So we have some work to do wherein we're fixing more and more of these rates. We're putting them more in the fixed range in order to mitigate and manage the interest rate risk. Now, having said that, we don't anticipate interest rate to dramatically increase. So far, the BSP and the finance team has demonstrated an understanding of how to properly manage fiscal and monetary policy so that it doesn't introduce a lot of shockwaves into our financial economic system. In other words, they won't. They will gradually increase it, and they've communicated this clearly, giving companies like us ample time to adjust our strategies, which we are doing so. And so, without disclosing anything yet, just know that the capital structure and the capital funding of the company is something that we're planning for and something that we look forward to sharing with you as soon as something is finalized in the next couple of months. Okay, so that concludes my financial performance updates. I'll pass it back to Franco, and then later I'll share with you some other exciting things about our financial projections.
Okay, thank you, Grant. Thank you for the comprehensive update for our investors here. I'll now move to business updates. So our land bank, as you know, has really hovered above the 100 hectares mark, and we're able to produce now close to 80, 90 billion of projects in the last 10 years. We still have a very healthy land bank and continuing to acquire such land bank. As you can see now, we have over 12.3 billion of land value. Around 60 hectares are currently under negotiation, and you all know about our 100 hectares in Minglanilla, Cebu. It's a 1/3, 2/3. 2/3 of our land bank are wholly owned by Cebulan Masters, and the 1/3 under our JV structures. So you can see us really producing all these new sales while maintaining our strong land bank at over 1 million square meters. So we expect this to accelerate further this year. Okay, so we are on track to spend close to 13 billion in capex this year. In the first quarter, the company spent over 2.6 billion in capex. So you can see us now moving very swiftly and I would say aggressively. You can see a letter V there when spending decreased during the 2020 for a good reason. And as things opened up in 2021, up to 10 billion, and now we are really on a path to spend close to 13 billion in expenditures. These are mostly in residential development. And then second would be investment properties, our hotel, our office, our mall businesses. And then around 20% in land acquisition. So you can see we're very proud of the expansion we have. What you don't see here is it's diverse in also its economic positioning. In residential, you all know we're in the high, middle, economic, even socialized segments. Offices include grade A, grade B, offices attached to mixed use. Hotels here are all branded hotels, except for new hotels that are CLI produced, like Abaca, with of course the Abaca group here. You have Magspeak, our mountain resort brand, and a new co-living concept called the Pad, located just across our building here in the Cebu IT Park. It's in Banilad Road. And you see our mixed-use projects producing very fantastic returns for us. Almost 50% for sale, 50% recurring. It's almost self-liquidating as a model. You have 38 Park Avenue, Astra, Masters Tower, Paragon, Baseline, Patria, our collaboration with the LPU in Davao, and Banilad High Street. Of course, we go to our high big ticket items like the Davao Global Township, which will have its grand opening, meaning opening our wide roads, our parks, our jogging paths this July. So sa mga taga Davao dira, abangan. And then we have our Ming Mori, of course, very historic, very important project with a lot of impact to the municipality. And you have our Xavier University campus development as well. Speaking of Xavier University and Ateneo, you have our eagle there. Congrats to our friends at UP for the well-deserved win. So all in all, we are actually approaching our 100th project this year, an important milestone. For those of you who've really been with us, we'll have our 5th year as a publicly listed company this June, next month.
Time flies, as you said.
Yeah, I remember we were at 30 projects in the IPO. Now we're going to our 100th. I still have my hair intact, meaning I did not lose much hair during that span.
Congrats, pare. So do I. When I took you,
yeah.
When we joined, when we were on the
Thank you for those who are greeting us. Happy 5th anniversary, and our investors who have been with us. So you can see here our residential portfolio is really our bread and butter. As we speak, more than 90+% of our top line comes from our residential. In total, we are now over 30,000 units. Spread across 67 projects, total project value of 91.9 billion of sales value in the Visayas Mindanao. What is important to note is this is 89% sold across the board. So you can see here, that's how we track it. You have, of the newly launched, already 80% sold. Of everything under construction, 86%. For everything completed, 96%. So this gives us confidence to continue what we do. What's important is we are, even before we acquire the property, we are very disciplined in selecting, knowing the price points, knowing the economic realities, and knowing what is the best we can give to our buyer in terms of price, position, design, amenities. I think it's in the preparation that leads to our success when it comes to residential. Okay, next slide. So I'll just quickly breeze through because these are a lot of slides. Okay, we launched our Dumaguete phase 2 there just very, very recently. Our very successful DGT, which was really, I would say, one of our, or if not our most successful selling event, selling 1 billion a day. We could have sold more if we opened more towers. So we're opening our 4th tower, I think, in July or next month. So we also launched another office condo. So this is Astra with residential here in front and office at the back. We really feel that as the BPO market is still normalizing, there's really a uptake in traditional offices. So we launched our office condo here in the Astra Center. And you have phase 2 of our Bohol project here. So in just 3 months, it's 80% sold across this inventory. Next slide. So you can see a lot of construction going on in CLI. And this is where we like to say that we're very focused. It's easy to launch. It's really in the delivery that makes us a better developer. We are very hands-on. With 30+ construction projects, we know where each project exactly is. We know challenges that needs to be tackled. For example, Bacolod, I was there last month, did my tour. Dumaguete, my team just went there earlier this week. Meaning from a centralized function or HQ in Cebu, we do have all our regional offices. However, the leadership team from Cebu has a mandate to regularly support and visit the sites, not just virtually, but also physically. So all these projects in Cebu, Cagayan de Oro, you have Bohol. These are all 86% sold. And these are contributing almost 51 billion in sales value. So as we deliver this, as percent of completion increases, of course, this will now contribute to the top line we report in our books. Okay. So as you know, all our completed projects. So this is where we are now generating a lot of cash flow with the delivery and turnover of units. The banks are very supportive, especially with the timely completion of our projects, with the high customer satisfaction. And then this is where, we have these projects now turning over, like our Mesa Vira in Bacolod, Casa Miracles in Sibulan, the new baseline, you have Mesa Tierra in Davao, and Mesa Verde and Cagayan de Oro, among many others. So next slide. So as you all know, due to the rapid growth of our residential business, we have made several big investment in the leasing business, but the residential is just moving so fast. And yet you will now see our leasing business coming into the picture very strongly in the next 2 years. We have now over 30,000 in gross leasable area completed. There's over 46,000 in under construction. You have 300,000 under the planning stages, and you have around 370,000 square meters in GLA that we will deliver in total by 2027. Next slide. So I'm showing you a picture here of our newly completed office, a grade A building, 5-star green building, rated by Verde. It's a combination of 60% for lease, 40% sold. The 40% has already been sold. The 60% for lease is now ongoing in its leasing activity. So we're very proud of this. It's near the gateway to the CBD here in Cebu. Hope you can visit it. Now, then we'll have our Astra Mall completing next year. It's going to be one of the most premium malls, surrounded by our 2 residential towers, our Radisson Red, which is a 4-star hotel. And then you have our Patra de Cebu, the newest, largest development in the downtown area of Cebu across our cathedral. So this will be very exciting. That will revitalize the area.
Yeah, Sinulog will be much more exciting.
Sinulog, or really just giving a good base for downtown. We have a lot of great sites. We have the Santo Niño, we have Cathedral, we have our Fort San Pedro. You have the connection to the new bridge nearby. So we're very excited about Patria de Cebu. Next slide. So you can see our hospitality business. We're showing you the render of our Abaca Resort. It's a very busy construction site. We're very excited for this because a lot of people ask us, is this for sale? But we always reply with our regrets that this is just a hotel, but it will soon be one of Cebu's most sought after luxury hotels, with the Abaca Group managing it for us. So in total, we're really looking at 1,700 keys by 2026. So these are the hotel portfolio. See, you have Citadines, which is our only operational hotel so far. Then we will have Life Cebu City, which is in the finishing stages. So Life is the co-living concept of Ascot Group. So we'll be the first Life in Cebu. It's been very successful in Singapore so far. After Life, you'll have Radisson Red in 2023, Citadines Bacolod in 2023. We're very busy finishing this. Then you'll have our co-living concept, The Pad. Then you'll have Mercure in the downtown. Our Jewel, the Sofitel in Cebu Business Park. You have Paragon in Davao, then Abaca in Mactan. Now, I would say when it comes to hospitality, we're very selective as well. These are projects attached to mixed-use projects or attached to CBDs or attached to the most prime resort properties. So you'll see how fast it will contribute to the recurring business of Cebulan Masters. So some significant milestones to report. We're very proud to share that in the latest independent market report done by Santos Knight Frank, Cebulan Masters is undoubtedly the market leader in the Visayas Mindanao. We have 33% of the condominium supply based on all the newly launched condominium supply, and 26% supply of the subdivision market in the entire Visayas Mindanao. So thank you to all our investors, all our buyers, all our partners for making this happen to us. Now, how did we achieve this? As we said, during pandemic, we were very busy. In a way, we believed in the market, and continued investing. And this is now the beautiful result of such approach.
Yeah, I'll add something there also. Of course, market share is not just determined by us, it's determined by how our peers and the industry is moving. And I think this is a very good demonstration and a manifestation of our commitment in the Vismin region. Because if you go around the Vismin region in the years 2020, 2021, by far the most universal feedback we've gotten is it's CLI who was committed to their projects, who continued to make sure that their land bank would be converted into actual projects to deliver housing units. It was very challenging, of course, but this is the advantage of being a homegrown developer with that focus in our geographical region, or to use the political flavor, our bailiwick, because we knew how to work with not only local regulators, but local contractors, local suppliers, the local economy, in order to move it forward. So while we were slowed down a little bit by the headwinds of COVID, if we're the only ones moving against everyone else who are making decisions outside of these locations and saying that we're not sure how to move forward in these locations, then it's the ones who are committed to moving that's able to actually win market. And this is now manifested in these numbers. So it's also a reflection of our relative performance, our relative commitment, and how we're able to serve the needs of the markets where we're in.
Yeah. Okay. So thank you for that, Grant. Okay, so this is now showing you that special milestone in the first quarter. I believe we made a disclosure about this just to update the market, but I want to highlight this further, that this is the first offering in our Davao Global Township, our award-winning best township in Asia. So this created a lot of excitement. You can see right after the selling, we immediately moved to construction. I mean, that is faith in the system, right? That is us really moving efficiently. Our buyers are so happy because they see now their reservation deposits, they see their installment payments being put to work, right? And that's how good real estate should be done. So we're now doing our pile driving there. So these are the first 3 towers. 1, 2, 3. So we're launching the 4th one next month. So that actually has a long wait list as well. So for those in Davao, get ready. And thank you again for your trust in the company. Next slide. Okay, so the exciting part where I'm very, very busy at is really the turnover. You have our 38 Park Avenue there. 2/3 are now covered in glass. We are done with the first third of the building. We've already turned over close to 80 units there. Our beautiful Mesa Vire is turning over 2 towers already. There's more than 200 units have been turned over. Mesa Tierra Davao, it's very hard how to choose my favorite baby among these projects, but they're all really well done. I want to thank the teams in our regional offices for really staying disciplined, staying committed to the quality we strive for. So Mesa Tierra Davao is almost more than 60 to 70% turnover as well. We've started to turn over our Belmiro in Uptown Cagayan. The nice problem I have is I'm ahead of schedule, right? So as buyers are still completing the equity payments, my units are done. So this is one of the nice issues we have to deal with. But that's already finished. We've turned over already several units. This is the subdivision where our Olympic silver medalist Carlo Palam was gifted a home from Cebulan Masters. And you have, of course, Dumaguete.
He's our first resident there. He moved
in already.
Yeah.
The grandma is staying there.
Yeah, he couldn't wait. That's such a heartwarming story.
Yeah. Okay, next slide. Okay, so as I would just recap the business updates and the significant milestones, I would say that we're now moving towards the end of quarter 2. The momentum is very strong. To be honest, mobility is at 100% here. Operationally, you see our human resources really beefing up the company very well. we are really looking at another, another very strong year for you. And I would say, what external factors are there presenting itself as obstacles. To be very honest, the real estate we do, mostly residential, is really a local play. You have the local market now going back to work. You have OFWs now going back to work. You have banks very liquid, still convincing buyers with attractive interest rates now, to take advantage of home ownership opportunity. So I would say that it's there in the writings, right? You have CLI producing sales higher than last year, both in new reservations and recognized revenues. It means that the local demographic story is supportive of the local real estate market, and I will leave it there. So, and I will elaborate further during the Q&A. So I now go to Grant, who will close this for us.
Right. So I'll just close this on how we're tracking against our projections, right? So in last year, it was just a few weeks ago that we did our full year analyst briefing for our results in 2021, where we were happy to report that we actually achieved 40% year-on-year growth, 2020 versus 2021. And so this year, our guidance is 20% earnings growth or net income growth. And given how we're moving and given the trajectory of where we're going, we're optimistic that we can meet this target. And with any grace and with any luck, if we should be able to actually outperform this target. But it's a long year. We know that we have to earn this, we have to work for this, and we will continue to do so for everyone. Okay, so thank you very much. That concludes our formal, I believe that concludes our formal presentation. Okay, nothing on sustainability, nothing on. Okay, and at this point, I would like to entertain your questions and any anything that you might want to discuss, and we'll entertain questions, Q&As, chat box. So please feel free to post your questions there, and we'll go through them systematically.
There's one question here, sir.
Sige.
Michael Hilado.
Yeah, please read it out.
Good morning. Are your sales cancellations booked and unbooked growing in Q1 2022? And do you have a growing number of repeat buyers, such as investors, which explains the strong sales of the new Davao project?
Okay. I'll answer those questions, and I might need a bit of help on the second part, repeat buyers. But I've seen the sales numbers, and just this is based on my understanding. Okay, in terms of cancellations, we've kept it steady at about 3.74% cancellations percent. No, and yes, it is slightly higher. Again, and this is not unexpected due to, again, some of the economic headwinds that we're seeing, but still something well within the margin of error or the margin of tolerance that we projected. There's always a natural rate of cancellations from people for varying reasons change their mind between the actual reservation sales and the delivery of the unit. But this is well within not only industry standards, but well within our projections and well within our bandwidth of tolerance. The second question is about, do we have a lot of repeat buyers? Actually, a lot of our buyers are first-time or primary buyers. These are, again, if you connect that to the demand backlog that we are addressing, it just it's a natural conclusion, and it's not surprising that a lot of it are first-time individual buyers for themselves. We do get repeat buyers, mostly for higher end investment properties, but for the most part, when we launch a project, especially residential, these are first-time buyers.
Yeah, I would really want to mention about repeat buyers, because I know a lot of them. A lot of who approach me say they have a Casa Mira, they have also a American Series project. So something Yeah. So I interact a lot. In fact, at 38 Park last week, I turned over. I accompanied a buyer who's a repeat buyer during his turnover. That's how happy we are with these repeat buyers. I think they see, example, we have a city condo, then we are now getting into mid-market beach condos like the Costa Mira. So they buy a beach condo, they buy a city condo, they even have a condotel. I believe that variety and the servicing uh, enables us to have these repeat buyers.
Frank, something for you. I'll read out this next question.
Yeah.
When are we going to launch Casamira Danao or Casamira North, the Pristina North Township, and our Magikay project?
If you'd like directions, just say.
Yeah. Yeah. So, wow. So, since you've been very loyal by attending the briefing, you'll get one of the first information about this. Now, I believe it was. Can you show our slide on the Clark? I think it was not updated. It was not highlighted. The launches this year. Is it shared now?
Yes, sir.
Okay. So you can see here that this is our launches for the year. I believe this is where investors and analysts really appreciate, how prepared we are. We planned for this 2 years ago, right? So you can see here that you have projects like the Migigay. It's not here. Yeah. No, so the Danao project, which is among the 15 that included this year, we're looking at the third quarter to launch our Casamira in Danao. It's located along the highway. It's a very beautiful property. It will actually be part of a complex with some retail and in even CLI's first walk-ups along the highway. And now I go to the Pristina North. I'm glad you heard about it. This anonymous attendee must be from Cebu. Pristina North is our third project under our joint venture with Eramon Moncho Aboites called Cebu Homegrown. It was already announced that we acquired a 5+ hectare property in the Pristina North compound. So what we acquired from Aboites land is the commercial component. We're very, very excited to introduce our award-winning mid-rise concept to this beautiful complex called Pristina. We have a homeowner, Grant, who's from there, so he asked me to make sure it's a very good development from us. So that might be towards the end of the year because we're still in the planning stages of the project. And then Magikay project. Which Magikay is this? Is this?
Kasuntingan could be.
Yeah, this might be the Kasuntingan project. We're actually building a showroom by the third quarter there. It's also a very beautiful 2.5 hectare property under our Cebu Homegrown joint venture. So this will also be at the fourth quarter of the year. So we have a lot of very exciting projects. I believe the timing towards the second half of the year will see even renewed interest in so many real estate products. There is some more stability post-election. As I said, a lot of the real estate we do here is very local in terms of its external factors. And we feel that after 2 years of pandemic, we are at the end or close to the end. So we are really looking at the real estate rebound, the real rebound this year.
Thank you for that, sir. There's another question here from Faye Almazan asking about Mingmori development. Any updates? Has the construction works for the project started already? And what is the updated timeline for the project?
Okay, thank you, Faye. So regarding our Mingmori, we're actually in the middle of our bidding phase, or actually we're towards the tail end of our bidding for general contractor. We invited the top contractors in the country and some of whom have from foreign collaborators. So we're really looking at the third quarter to break ground and really mobilize the contractors. As you all know, this is the only one of the few projects with a notice to proceed from the Philippine Reclamation Authority, accompanied by ECC, and all the national clearances. So it's a perfect timing for us in the third quarter, as scheduled.
Thank you, sir. There's a follow-up question on the Pristina North project. Is this purely commercial or it's a mixed-use development with vertical village?
Okay. Hi, Eda. Okay, my future buyer at Pristina. So the Pristina North will be mixed use. As you know, with 5 hectares and in an area with a lot of residential around, the challenge in the Talamban Pitos area is there is really no good commercial. So you have to travel far to get your coffee or to buy your groceries, for even for a good preschool or gym. So the goal there is really creating a little community surrounded by mid-rise buildings with really nice retail storefronts. So it's going to be one of our showcase developments in Cebu. So you're right, mixed-use development with vertical village is something you got correctly.
Thank you, sir. Before we end, can I read one last question, sir?
Sure.
You can read a few more. We have we're not in a hurry.
We see that CLI will start selling lots with DGT. Will this be also the setup for other two estate projects of CLI?
Yeah. So I'm glad you pointed that out. So at the end of this slide, you can see DGT lot sales. So as you know, CLI has invested significantly here. Site development is about to be completed. We're already building our first residential component. The outdoor mall is about to start, and the civic center. So we are really preparing to sell commercial lots in the Davao Global Township. And there's a potentially 4.5 billion in sales from such. And we're just referring to less than 1/4 of that property to be for sale, while the JV CLI with our partners will still maintain and develop the rest. So that's happening hopefully in the third quarter as well. This is really something that would definitely boost the top line and hopefully accelerate our results for the year.
There are more open questions here,
Good.
sir. From Krista Monte Alegre. You have mentioned the possibility of raising capital. What options are you considering, and have you started engaging banks for this initiative?
Krista, we are considering a lot of options, but we've actually narrowed down those options because we've already finished with the consideration phase. We know exactly what we're going to do. We have a strategic direction there, and yes, we have engaged banks already, investment houses, as early as a few months ago. So as things are already moving. I wouldn't say that if things weren't in a certain stage where we're confident that they're moving in this direction. So yes, but nothing disclosable yet. Nothing has been signed or finalized, nor an application has been made. But please watch out for that. Also, we're looking at everything from corporate notes to commercial paper to retail bonds. And even on the equity side, there are some things that we are considering. Again, nothing disclosable at this point, but something that we will responsibly and eagerly share with the public once something is a bit more finalized and something, there is a term sheet or there is something that we can disclose. Okay, thank you for that. The second question, I believe, is also, I think I can take on this.
I can take first, then that's my brief because I was thinking about it.
Sure.
Considering that somewhat rising interest rate environment, how much of an impact can this be in terms of demand? Like due to possibly higher financing costs. When I bought my first condo in 2009, I paid interest of 8.5 to 9%. And I thought I was, 8.5 to 9%, right? So, I mean, historically, if you look at it, right, we are still at 5 to 6% spread over a 10 to 20 year tenor. So I would say if rates hold there, even if it inches up to 6 to 7%, it's still within a very reasonable scale. That is why that is why we tell our buyers to take advantage of the environment now. You can lock it in for 3 years. And that gives you even 5.9% or 6 at 3 years fixed. So I would say we're still within a reasonable interest rate environment for the end user because of the long tenures of such loans, grant, right?
And especially if you're getting pag-ibig, for example, typically the loan is 20 to 25 years. So a few basis points additional or less is frankly not going to make a very big difference on your monthly amortization payments. For our end users, you have to understand that interest rate costs, while they play a factor, that's not the overarching factor. I mean, compared to renting a place versus owning a place where you're actually paying towards equity ownership, meaning you're paying equity ownership when you take it out with a bank. Long-term rates have less of an effect. Interest rates have less of an effect in their decision making whether to get a home or not. So the primary consideration really still is they want to own a home. Gusto nila magkabahay. And with the elections over, I was saying that in a political landscape, housing has always been a constant plank of any administration that you see out there. So this is a very politically neutral industry where every administration understands. This goes all the way from decades back that housing is a fundamental pillar of our economy, of our society. You're going to be very supportive of this, and that's the demand we're addressing. And certainly, even when interest rates rise or creep up, that demand will not go away. We're very confident in that.
Yeah, and I think let's not forget that real estate really rewards those who invest early. You all know that capital values in real estate, especially good projects, appreciate at least 30 to 40%, right? From pre-selling to the time they're completed. So that easily is what counters interest rate volatility, the capital appreciation.
Exactly.
Whereas you lose money when you're not putting your money to work. Is what my advice is usually to first-time homeowners. And I always, as Grant said, rental is the worst kind of investment, right? That doesn't go back to you. So we always try to do this, and that's why we have affordable products that give a lot of value, like our Casamira, where for 1.4, 1.5 million, you can own a home.
Right.
And you just set aside 5,000 a month. Right, and when you get your loan for 20 years, that's 7,000 to 8,000 a month.
And the value of that home will continue to appreciate. So that 1.5 that you bought it for, that's now worth 3 to 4 million pesos once it's finished. All the amenities are there. The road networks are there. The access is there. There's
I think this is applicable to all developers, but I think this is where how does CLI give you an advantage? We finish our construction projects mostly ahead of our peers. 2, we try to really price it with a lot of upside for our buyers. I think this is where, on a developer to developer basis, buyers will now check, in spite of these rising interest rates, which deal is the best for me? And it now goes to that. And when you check all the criteria, I hope they will see CLI being very generous in its offering.
Yep.
We are still actually, there's one more question here, sir, about Pristina North and Kasuntingan investment.
And also Davao.
Yes, but let me check first the actual numbers. But can I read one question here, sir? Okay. Recently, they should have issued the increase of economic housing ceiling to 2.5. What would be the impact of this to CLI?
I can answer that. That means that the Bureau of Investments will now allow an approval or will give tax incentives to housing projects whose individual housing is 2.5 million or less. So if we apply for this BOI incentive, it means that more of our housing unit projects will enjoy Bureau of Investment incentives, such as an income tax holiday for 4 years, among other things. So from that point of view, it provides a little bit of a financial boost to the industry. But nonetheless, this it also there are considerations to be made about how we'll allocate those costs as well. But overall, the net effect is quite positive. So in fact, it should move with the inflation rate, right? What they define as economic housing. But yes, it has mostly to do with tax incentives that we're applying for and that we're using judiciously. Okay.
So I think I can answer this about from Krista Monte Alegre here. Most real estate companies are getting into logistics and data centers. I know you have a very strong residential business, but are you considering entering these new segments eventually? And will you consider JVs should you pursue these businesses? So I would answer by saying that we are getting into industrial through our Mingmori project, right? But when you look at logistics or even data centers, a lot have approached us. We're very open. As we said, we are a diversified developer. However, it now goes back into which investment gives you the returns, right? Residential being very stable for us gives us, no, we say 30 to 40% IRR or return a year. Whereas when you look at logistics, I think you're looking at single digits to at least low teens. So that's what we balance out. Of course, it's a great diversification, although we are diversifying into recurring business through our hotels, offices, retail businesses. So for now, we're saying that logistics is attractive, but if we just do it small, the return will be dwarfed by returns for residential. But if we can scale up, really, there's like a 50-hectare logistics hub we can do. Why not? So that's why we're expanding into townships. We have what we're doing in Umapad, Mandaue there near the second bridge. We're doing our project Minglanilla. So these are possible hubs where logistics hubs that we are doing. So thank you. We've done our newest business is co-living. So co-living in very prime areas near CBDs. So we're doing the pad, what we call the pad. So for 3,000 to 4,000 per bed, you can live in the heart of the city, sleep like a baby in the heart of the city.
Yeah.
So that's the new. So we are really a developer that's very agile, as we say. Logistics is more of a return consideration, I think.
Okay.
Maybe we're ready to answer the question from Kat Cacho, sir.
Okay.
So how much is the investment for Danao, Pristine North, and Kasunting?
I have to say, Anala, as a caveat, I think the figures are ballpark because again, as Franco said, we're in planning stages. We have an idea. We have a very strong idea of what we want. So these are going to be projections.
I think I would come up with a rough. My ballpark is around 8 billion of new investments for Cebu because I know Danao is around 2. Pristina is significant, around 4. And then you say the Kasuntingan around 2. So yeah, you'd say for initial phases of these projects, it's 8 billion of investment for Cebu. These are Cebu projects.
Yep.
Another question from Michael Hilado. How do you balance construction outflows with DP or loan takeout inflows?
For example,
good project, yeah.
Okay, I'll take this one. The answer, Michael, honestly, is you cannot balance it. You see, as a developer, and this is something that you have to understand the financial model, the financial structure of a developer. We are cash out. So the way to actually, if you're talking about balance as in a balance of funding and where do we get the liquidity, that's where proper capital planning and funding structure really comes in. You have to project your project costs well. You have to monitor them religiously and diligently. And then you have to also take care of your collections. But even then, you'll have a gap, that funding gap, which has to be addressed by, again, proper capital projection, proper capital planning. So the quick answer there really is that before you launch a project, or at least when you plan to launch these projects, you already have to have your funding lined up. You have to have your capital already prepared for such projects. The last thing you want is to run out of liquidity in the middle of a project. Then everybody loses, right? So there is no balancing the DP. You cannot ask your buyers to fully pay for their unit or to proportionately pay for their unit as it goes up. It just does not work. The industry does not work that way. You can tweak the proportions, but for the most part, you have to plan your capital. This is capital expenditure planning, and truly a core function of your finance team where capital planning is very key to executing the projects.
Thank you, sir. One last question from Christopher Chua. Will CLI be looking at REIT soon?
Well, we've answered this question in, I think, consecutive briefings now. Yes, we are looking at REITs, but soon as a relative term, when you say soon, it's not immediately soon, not in the next couple of quarters. We're not applying for anything. It will be in the next 3 to 4 years. I would say in our intermediate plans, not super long term, but intermediate plans, because a REIT from a sponsor needs a stable recurring income base with operating assets that has an established track record. That's the kind of quality assets we would like to put in a REIT before we go out with our own REIT. So when we do go out, and we will go out with a REIT, let's say 3, 4, 5 years from now, it will be infused from us as a sponsor with stable, quality, recurring income assets. So as if you are able to look at what we connect the dots and look at what we're constructing right now. So we're talking about the hospitality projects, the office projects, the retail and commercial projects that we have. And we are already thinking about how to structure those assets, how to infuse them, or perhaps transfer them into a REIT vehicle in preparation for a REIT. But we're at that stage. Our first priority is delivering these units or these assets organically. We construct them well, we execute them well, we launch, we operate them, and then once a certain it has achieved a certain operational stability, then that is the time when it is right to put them in a REIT vehicle and get proper valuation and capitalization for them.
Okay, so something to look forward to. Completely agree with Rat there. And yes, as we end, somebody pointed out here in the chat group that yes, you'll be getting your 2021 dividends tomorrow. Invest it wisely. You know, one of the wise options is to invest more in CLI. Just kidding. But yeah, we're always happy to be returning returning these to our shareholders. Thank you for continuing to keep track of us. There's a lot of good news here from Cebulan Masters, and hope you can spread the good news. So thank you, everyone. Have a great day.
Thanks, everyone, and thanks for your time.
Bye.
Thank you.